Some people believe cryptocurrency is a scam, a global fraud, the greatest Ponzi scheme in history, and they are sceptical of its future. While crypto optimists think that these decentralised currencies will shape the future for the better, according to actor turned crypto critic Ben McKenzie, the cryptocurrency industry is the largest Ponzi scheme in the world. In his opinion, the crypto market is heavily driven by hype, speculation and fraud. However, it seems either way cryptocurrency isn't going away anytime soon. McKenzie told lawmakers in Washington the collapse of FTX highlights the harm done to millions of people worldwide who have invested in the cryptocurrency market. McKenzie told the Senate Banking Committee hearing examining the implosion of FTX and Alameda Research, a related crypto trading firm. The demise of FTX and Alameda represent the most spectacular corporate downfall since Bernie Madoff's Ponzi scheme imploded in the wake of the Great Financial Crisis. McKenzie was referring to financier Madoff, who in 2009 was convicted of running a decades-long Ponzi scheme that conned his investors out of $65 billion and which collapsed during the 2008 financial crisis. In 2008, in the backdrop of the largest financial crisis to hit the US since the Great Depression of the 1920s, Satoshi Nakamoto had a vision to create a peer-to-peer currency that was decentralised, and Bitcoin was born. People who saw the banks and government in the wake of the global recession as untrustworthy adopted Bitcoin and the philosophy of cryptocurrency. The global currency of the people, owned by no central agency in the wake of a global recession, you can see the appeal. And as more people bought into the message, the more its value rose. But was Bitcoin doomed from the start? Bitcoin had a fixed supply of 21 million coins, making it deflationary by nature. It's also not a very good method for transactions, as it can only complete 7 transactions per second, compared to Visa, which can process 1,700 per second, or even MasterCard that can process 5,000 per second. Also, Bitcoin mining wastes energy. Big warehouses full of computers using real-world energy, whilst the transaction time remains the same. So if you can't practically use Bitcoin for transactional purposes, what use does it have? And how has Bitcoin survived? Most people buying into crypto aren't buying it for transactional purposes. They're buying it to invest in or get rich quick. And here lies the Bitcoin contradiction. The more people who buy it as an investment, the less liable it becomes as a currency. So now anyone who buys Bitcoin or any other cryptocurrency is doing so to sell at a higher price later. And the people that buy off those people are also looking to sell it for a higher price in the future, and so on and so on. The only way to make money is to take money from new investors. This makes it nothing more than a Ponzi scheme. People only make money because somebody loses money. Then along comes Ethereum. Here was a sophisticated blockchain that enabled people and companies to create their own cryptocurrency using the Ethereum blockchain. These currencies were called tokens. Businesses could create their own token coins, then release a white paper to explain the project behind it and sell it to the public. And ICO, or initial coin offerings, were born. Over 1,500 coins have been created, some of them legitimate and some of them declaring to be fraudulent. Ponzi coin, Jesus coin, a lot of them were a scam and they didn't even try to hide it. Many celebrities and influencers have been involved in the promoting of cryptocurrencies and NFTs, but it turns out many of them were paid to endorse them and create a buzz and a hype on social media. Investors have gradually embraced cryptocurrencies, and their market capitalisation has increased. But the wider public is still trying to accept them as a reliable form of payment due to real-world technical difficulties, a lack of confidence in issuing authorities, and a lack of knowledge about how to use them. An increasing number of people are raising alarms about the risks associated with investing in cryptocurrencies. Cryptocurrency skeptics point to a lack of regulation, a lack of intrinsic value, or cash flow in the product. A system whose viability depends on an ever-increasing number of new players, and markets that are managed by a small group of financial elites. Because crypto is not regulated by a central institution, and because crypto transactions are anonymous, tracing perpetrators of crypto fraud and recovering from theft is always difficult. Crypto scammers take advantage of the unregulated market, adopting various tactics to mislead people into fraudulent investments. And unfortunately, many people have fallen victim to this. But is cryptocurrency a scam in itself? According to the chief executive of Binance, despite momentary market volatility, cryptocurrencies are here to stay and there is no going back. So what is the future of cryptocurrency? Popularity has declined recently, and who knows if the bubble will fully burst? Will it ever be the future of money?